Understand that. Market makers apply the brakes, trap everyone except us the wrong way. That's the 3-day cycle. Now this cycle in 3 moves also plays out intraday. Remember I showed you? Peak formation low, stop hunt, rise off of the low, hit the stops, rise. Hit the stops, rise. Hit the stops high. One direction, unidirectional stop hunt. Snatch the traders, pull away, validate the pendings, one more pass, pick up the breakouts, grab the guys that were in the right direction by stopping them out or scratching them out at +1, and then on their merry way the opposite direction. Okay, I'm going to draw this stuff for you. Okay. The reversal in the market is used for market makers to book a profit. Okay, price is rising, couple of days, everyone's long. They're buying from the traders, so they are net short. They got to get out of those positions or offload them to book a profit. The spike that you see before the reversal hits the stops of the people that are right, puts those contracts in their pocket, and induces people to take more longs. Those contracts will end up in their pocket as well. Think for a minute, man. Do you really think the broker's matching you up with some dude in China? And if you're in China, do you think he's matching you up with some dude in Italy? Do you really think that? Or is he in fact taking the other side of your trade and hoping that you haven't had this class? That seems more plausible to me. Okay, I'm going to break here. Is anybody writing the slide down? Please, I'll leave that slide up. I'll put the clock up. I'm actually starving today for some reason. I don't know what the hell happened because I ate. But it's 8 o'clock. Let's take our 30-minute break. I want you to think about what we've talked about so far, the trend cycle, stop hunts, all the things. And I'm going to start breaking things down for you. Okay? All right, I'll pull up my little, let's do 30 minutes. I don't think that's too long. I think it's good. We're going to go to about 11 o'clock tonight. Around 10:15, depending on where I'm done, Carr, one of our top students and traders, is going to hop in here and show you how you're supposed to be marking the charts and actually teach you how to do it. I got a lot of emails last night from people saying, man, I've never even tried to mark a chart before. I don't know what to do. So I guess it would make sense that before I give you the homework that he would show you, in fact, how to do it. The veterans that have been around, you can knock off tonight around 10:15. Okay, the new guys, I want you to submit your homework in this format and start to see what you're looking at on the charts properly so we all can be doing it the same way. So when you post in the forum, your charts will match other traders' charts that we're all working on together, okay? All right, let me get my little clock, take a break. Couple questions. Let's see. Dave asked me, is it okay to trade in the changeover shadow box? Absolutely, Dave. The changeover shadow box is where you expect the stop hunt to come in. Is it always going to line up right there? Absolutely not. But if the pattern, you trade the pattern. The boxes are a guide. If the boxes don't line up, don't not take the pattern because you think it's supposed to be in the box. Understand? Let me run this by you real quick. I usually say this every class, and I failed to say it this time, so let me say it now. For the first couple of 3 days, you're going to be confused. You're going to be asking me about the indicators. You're going to be asking me about the boxes, this stuff. I promise you that by the end of the 3rd day, okay, so tomorrow night, 3rd day of my teaching, not 3rd day of the class. By tomorrow night, things should start to come together. Okay, if they do not, then you need to send me an email and tell me what's wrong. Okay? Anybody having technical problems? I think Zen has a way for you to call in. He can help you load Java. I don't want you to miss out. The recordings are going to be hung in the forum for 2 weeks. So if you miss a night or you have issues, just get in there and write down the time you went down and then convert the recording over to the time you need to pick up, right? Like it's 8:30 now. If you went down from 8 to 8:30 during the lunch break, then you're good. If you went down from 7:30 to 8, that's the section you need to watch, okay? Just make a little note next to your computer and say, man, I didn't hear that part, I need to hear it again. That's the point of the recordings. You could start and stop them. Okay? Nice to see you, Alan. Back in here. Thanks for the no problems. Okay, so we left off on the chart about hoping he didn't take your class, okay? So seriously, if you're confused, just relax and listen and try to observe and pay attention. I promise you, I'm going to start hammering all these concepts together. What I'm doing is I'm throwing a bunch of concepts at you, and then I'm going to wrap them all up and bring them back together by the end of the sessions, okay? The idea is for you to realize that there's something else going on. These guys suck, and they're trying to take your money. And understand that you can beat them when you trade in line with them. That's what you need to understand right now. I'm going to repeat the concept enough times that it should stick in with you. It should stick to your brain. If it doesn't, that's the point of the recordings, okay? I don't want to waste too much time on that. Continuation of the trend slides we were looking at. Not continuation of the trend. Continuation of the trend slides. A trend reset will be used for market makers to book a profit but not reverse directions. Right? What happens? Give out their money, give out their money, give out their money, need some back. All right, but you know what? The target is that euro still must rise to a certain point. So they reset the trend by forming another anchor point, V or W, and then they break the previous high and continue on up for another 3 days or so. A reset will represent a new peak formation, high or low. Then you can expect 3 more days of rise or fall. However, very important, if no trader falls for it, the market maker may reverse the direction after only 1 more level or 2 more levels. That's why you have to understand his behavior in order to understand where you are in the cycle. Right? Things that I started talking about. Am I near the high of the cycle or the day, Steve? I don't know. Is he opening the spread? Are the pins switched to the top side of the candles? Have you seen vector and acceleration and speed around the price points you're at right now? Did it take 3 aggressive candles or 1 long spike candle to get there? These are the things you have to ask yourself. Is this the end of the ride? Is it 3:30 or 9:30? Is it 12 o'clock in the afternoon when they go into consolidation? That's how you tell where you are in the cycle, by the timings and the behaviors, not by the technicals that regular traders look at. Market makers validate that stuff to trick you. Like I tell people, they go out for about 3 days or so and they got to get some of their money back. They go, Steve, Euro's been going up since its inception when it was 99 cents to the dollar. I remember that. I remember people saying that the euro will never pass the dollar, that it's a natural stop-loss barrier. And guess what? Those idiots didn't use a stop, and when it broke the dollar and never looked back, they're probably still holding open float from '01 or something. Understand, you have to start thinking from the back side of your screen. Start thinking like one of these guys. Start thinking, okay, what are the retail traders looking at? I see that consolidation accumulation phase right there. I know if I was on the other side of that, I'd be collecting up some contracts right now. What's my next move? I'm going to hit the stops 1 more time, snag everybody, and go the other way. That's how you have to start to think. When your mind opens up to that and start thinking like them, you will start to make money like they do. It's that simple. Okay. Once the peak is identified, the trend bias will be in line with the peak for 3 days minimum. Could it be 2.5 days? Yeah. If they come in at the London session for the peak formation, they can go London, US, London, change in US. Because the 3 levels were accomplished, but it was only 2.5 days. Very important. It is safe to trade V bottoms and V tops if you have clearly identified the cycle direction and the trap volume move. If you see the W anchor point to the low, and it goes up, goes into consolidation, the next day if they issue a V stop hunt like they did last night, it was actually a W, but it came right back out and repeated the level as a V right at the London Open. It's safe to trade that V because you knew it was part of a multi-session W, right? Here. Yeah, where did it go? All right, I don't know what happened to the folder. It got buried in this this stuff. I'll dig it up on the break and show you, okay? I'll draw it for you, actually, just right here on the chart. Let's do this. Okay, yesterday, we knew price was dropping. It made the spike, right? And then it went into consolidation overnight. Okay, when London came around, here's the London, Asian, right, market maker channel, Tokyo channel. When they made this out of the box and came back, this is technically a V bottom. But it's part of a larger structure that forms this W. So it's okay to take a V bottom when you, in fact, understand the directional bias by the market maker. Okay? Does that make sense? That's what I'm talking about. The big picture, the big thing. Don't get caught up, which most people do, and I understand that, but what I want you to do is get out of that idea, that concept. What most people do, and I got to ditch the pen to get the slides back up. Okay. Is that you get jacked up in your little section of the chart, right? Okay, someone's saying the screen's black. I see my screen. Yeah, okay. Floyd, log in, log out, buddy. Okay, so here, look. Back to where I was, right? This is how it's usually going to play out. The W is going to form, and then it goes into consolidation. This is level 1, day 1. The next day, he might do this. That's okay to trade that. He's not always going to give you a perfect WWW every day. If he gives it to you, it's a bonus. Hey, Dave, I didn't see you, man. Nice to see you in here, buddy. If he gives it to you, it's a bonus. It makes it easier. Okay? That's what I'm talking about. I'm talking about that once the anchor point is set, then you, in fact, will understand the trend bias. Here we go. Anchor point, day 1, confirms second leg reversal, right? The second leg, or the multi-session W, spread out, confirms that the trend reversal is on. Okay, what do you mean, Steve? If he comes back for a second swipe at those people, and it's spread out like over a day or 2 days, let's say he hits the low Sunday, and it comes back in here on Monday. If he spreads that out over 2 days, he ain't doing that because it feels good. He's doing that because there's a ton of cash down there. And the way to get it is to go down there and pick up those orders and like scrape money off the sidewalk. So what happens is you get day 1, level 1 rise, right? Goes into consolidation. You have your 1, 2. You might have your aggressive move away. You might have a 3-day rise within the day 1. All right, hold on. You're going to love this. All right, time to go. At the end of the day, he goes back into consolidation to end the day. He starts the cycle over, right? He then will make a V bottom. I was expecting this. If he does this, more power to you. It's better. But he may not always do that. So it's safe to make the entry off the railroad tracks because you're going to have your vector. 1, 2, 3 right out of the box. You might get a pivot laying there. Yesterday's tracer. Some things will be laying there. ADR low. Might be laying right there and give you an idea that, hey, the stop hunt should stall right here and the reversal's there. And then again, you have your 1, 2, 3. You may only get 2 levels in this example. Right? If he comes out again and issues a V, I expect this. That's good. Now the expected move is this and reverse. Back into the range. What's the range? High minus the low divided by 2. It's going to be right about here. If it's a 300 pip move, you can expect about 150 pip retracement. Okay? The V could hit the mayonnaise. It could hit the watermark. Okay? That's the cycle. And it's the opposite cycle for the way down. Okay, now, keep this drawing in mind. Okay? Now let's look at a chart. It's kind of funny. I drew it like that. All right? You have what we call a 33 trade on the last day. Okay? And I'm going to show you that. The 33 trade is a very aggressive day that guarantees a reversal of about 50 to 100 pips minimum. Here's why. Okay, isn't this pattern not only the intraday pattern, but it sets the beginning stage for the week? Right? Back into consolidation, vector 1, 2, 3 to the low. Morningstar formation around the mayonnaise can be construed as a V bottom or a W, depending on how you want to look at that. Right past the Mayo. Why would he come down past the Mayo and close aggressively past the Mayo and then snatch it right back in one bar? Because it works. Hey, Wayne. It works because when they close below that, there's two candles below this, right? A retail